Hey, what's going on, cash flow hackers? It's Chris with Life 180, and I am here with my buddy Dominic Hrabe. And everything that's going on in the world right now with the crypto markets, with the FTX crash, with a lot of stuff. I've gone honestly, in full transparency, I've been a little bit overwhelmed going on, trying to do all the research, looking at all the YouTube videos, going on Google and doing searches and trying to do all this stuff. And my head was spinning. And rather than trying to figure it all out, I decided I was just going to call Dominic, and he is the crypto expert in my life. And so I figured I would just call him because I was like, you know what, who would know the ins and outs of what's going on here, and be able to answer all the questions. And I figured rather than have a conversation with him personally, I invited him to come on here and do it live. So he's a brave soul, and we're going to do this live and answer questions. So anybody that has any questions, you can always, like, in the comment sections, make, this is obviously going live, so we're going to try to be as dynamic and answer questions as possible. I've got a lot of questions that I'm going to start with to get the thing rolling. But Dominic, man, thanks for being brave. Thanks for being here.
Yeah, man.
Pleasure. And yeah. I'm excited about this because, man, I mean, after the Luna thing, there's been a bunch of things that have happened in the past year in the crypto markets, I feel like. And I think Bitcoin is under 17,000 now.
Yeah.
I think it's creating a lot of skepticism. And I guess, as I get into this, my personal kind of belief on this is, there's still a ton of opportunity. I still believe intrinsically in the crypto markets. I think it's just kind of like, you gotta, like anything else, be educated on this stuff before you start putting your money into it. Right. Like, and so, I guess I'd love to hear, like, give me a breakdown if you can, kind of like, give me like a summary of like what you see happening over the past, I don't know, 6 to 12 months, and like what's happened in the crypto markets, what's led here. How, this guy, what's the guy's name at FTX?
SBF, or Sam Bankman-Fried.
Okay.
Yeah, that's, as everybody just always referred to him as SBF.
Okay, so how does a guy like that get away with what he's doing? Like, kind of talk to me, like, let's break it down for the simple person who like has maybe thought about getting into crypto. Maybe they're not like super deep into it. Like, kind of break it down for me if you can.
Yep, I'm happy to. And let me kind of back up a little bit even more and zoom out even a little bit more. And I don't know if I mentioned this in the first conversation that we had, but this is really part and parcel of like fourth turning type behavior, right? So if any of you guys have read the book Fourth Turning, we are in a fourth turning right now. We have been for about a decade, a little over. And, the best way I can describe this is, in normal periods of time, there's a saying out there where it says, there are decades when days happen, and then there are days when decades happen. And, the last couple of years, I think we can agree that these have been days where decades happen, where changes occur so dramatically, so quickly, so expediently, and our brains don't have the context in which to really understand everything that's going on, all the change that's going on. And so if you just look at the crypto markets as an example of that, I mean, good Lord, what have we seen over the last, to your point, 6 to 9 months? We've seen the collapse of Luna. We've seen Three Arrows Capital, one of the largest hedge funds in the entire space, just absolutely get blown up. We've seen Celsius and Voyager completely go bankrupt. Now we've seen what's going on with FTX, Alameda, and now we've seen BlockFi. We're going to probably see additional contagion from that, from all of the funds that were invested in these entities, have to write down their losses. So there is a lot, suffice it to say, there is a lot going on. But also, let me back up even a little bit further. Narratives are what drive markets, right? So you typically see narratives like this on the downside, right, going into the bear market or in a bear market. But also on the upside, you see different narratives emerge of positive narratives that then drive the price further higher and higher. So we're just seeing the reverse of that. That's all we're seeing right now. So does this mean that crypto is dead, and that 10, 20 years from now, like people are calling for crypto being dead? That's really a bottom signal in my view. Those are bottom signal type philosophies or beliefs that when something is hated, that is an opportune time to potentially to join that market or that asset class. And so you're seeing this. It's almost like a gift. Now, I'm not suggesting that just go in and ape in all these assets right now, but
Totally.
we are much closer to a bottom than we are to a top. And that's I know, obviously a very, very basic statement, but we've gotten so much leverage out of the market through this, through not only with what happened with Three Arrows Capital and Luna 6 months ago, but this as well. And there was many of us in the market that we were thinking, hey, there's another shoe to drop here. What's it going to be? And I think we've seen it, right? I think we've seen that shoe drop.
This is a pretty big shoe.
A huge shoe. The second shoe was bigger than the first shoe. When we saw Three Arrows Capital, we saw Luna collapse. A lot of us were like, "Holy crap! This is a once in a decade moment in crypto." Well, we've had 2 once in a decade moments in the span of 9 months, right? 6 months.
Crazy.
So to answer your question on how does this happen? Well, the interesting thing is now that we've started to kind of really dig deep into SBF and who he is the guy was really a late arriver to the scene, which is a little bit interesting. He's not an OG. He wasn't around in the early days. I mean, I've been in crypto longer than SBF has, right? Yeah. He really came on the scene in 2018. And he came on the scene with his hedge fund, which is Alameda Research. So then they started FTX. And all of a sudden, before you know it, now FTX's name is on stadiums, the Miami Heat stadium, and you got Giselle and Tom, doing Super Bowl commercials. Well, in retrospect, those are major top signals, right? When it's getting so in your face and so everywhere, that's usually a good idea or a good it's a good signal to say, all right, let's maybe peel back some profits and let's start diversifying here a little bit. Right. Well, but to going back to like SBF himself, how did he? There's a lot of speculation on how he actually made his money. There's the official story, and there's like maybe what's real, and that's gonna come out. But those are people, everybody that's listening, probably is already aware of how politically active he was and how much political donations he made. The connections with his CEO, Caroline Ellison, whose father is good friends with the SEC chair, Gary Gensler. So now you've got kind of a fox guarding the hen house kind of arrangement here, where the very guy who's supposed to regulate you is really in bed with you. And so there's a major conflict of interest. I can tell you one thing: I would not want to be Gary Gensler right now, because I think that there's. And if you look too, let's look back on previous scams like this of this magnitude. Yeah. So let's think about Madoff, right? The most famous one of the last decade. Yeah, Bernie Madoff. Well, there was a lot of clawbacks. So for people who actually were able to retrieve some of their funds prior to prior to Madoff going down, some of those investors were clawed back their funds. For other claimants or for other creditors, right? It could get to the point where those political donations that were made, I mean, you're essentially using FTX depositor funds to make those donations. You're essentially stealing from the little guy to give to the politician. Yeah. And so if it gets to be that, if it gets to that level, that could be very, very interesting on how this thing all plays out.
Wow. So you made a comment there in the middle, and I kind of want to touch on that. You made reference to, we look at like Brady and Giselle being on commercials and like that being a signal of a top. I think a lot of people looked at that and looked at it as a signal of viability and legitimacy, right? Like in that, because like we're used to seeing mutual fund commercials. We're used to seeing Raymond James commercials and all that stuff. So to them, it was just looking at it being like, oh, crypto has arrived, right? Is that fair?
Yeah, I think that's absolutely fair. But when you have such a meteoric rise of an asset class that's gone from kind of obscurity, right? And this is just how Bitcoin and crypto works. And most all markets work this way anyhow. But, you have the boom and bust phase, right? So the Fed started lowering interest rates, or I should say raising interest rates about a year ago, right? Yeah. Well, if the Fed hadn't done that, then maybe we have different narratives right now, right? Yeah. But because the Fed started raising interest rates and because we went into a hiking cycle, Fed policy hiking cycle, now you have you have different narratives, right? Now that all of a sudden, instead of the market going up, the market's starting to come down, psychology changes, psychology shifts, right? So you have all these factors at play. But with that, in that context, now we're going into a bear cycle, a Fed hiking cycle. Now, instead of that being a crypto has arrived, it's now a top signal in retrospect, of course. But
yeah,
nevertheless, all cycles are moving, or all asset classes are subject to that, right? There's so many different asset classes are subject to the price of money.
Yep.
I was just listening to a gentleman earlier. I think now, like the one day, or the reverse, I think it's the federal funds rate is now higher than the 10-year bond, which is just absolutely mind-boggling, right? So the bond market is still showing signs of massive stress. So what does that tell for what does that mean for the other markets? Well, we're not quite at the bottom yet. And I don't think we're yet at the bottom for crypto. I think we're very, very close. Crypto risk assets like crypto are going to sell off first. And so you've also seen too, look, I think that this has shown market strength in certain subsets of the crypto market. For instance, there's a token that we hold that is a kind of a competitor to FTX, but it's a decentralized exchange. It's not a centralized exchange. So there's no one person that controls it. All the activity is done on chain, meaning it's fully transparent. In other words, there's no balance sheet that is cloaked and daggered behind a curtain. Everything's transparent, which is the first principle of crypto anyhow, right? You shouldn't be handing over your assets to someone else to custody for you, right? So for those of us that didn't do that didn't hold a whole lot of assets on centralized exchanges, we have largely been unaffected by this, other than price volatility, of course. But there's a token that we were holding that, it significantly dropped, I think like maybe 12 or 15% that day, but it's already back up to its previous high before that. Whereas the rest of the market is still sold off, right? So there's still opportunities in the market if you know where to look. But yes, from a macro perspective, what's been going on as, negative narrative on the bear market side, right? Then you have stories that corroborate that, right? Because if this was going on, if everything was all, sunshine and rainbows right now, we wouldn't be looking at FTX's balance sheet. I can guarantee you that. Because their collateral, really what happened was their collateral fell, which is denominated in their own token, which is a utility token called FTT. So what happened was they started loaning out their balance sheet or depositor funds to their hedge fund, Alameda Research, and then Alameda Research just went and gambled with it. Okay. But those loans were denominated in the FTT token, which isn't even a governance token. So I'll give you guys, your audience, of kind of a crash course on different token designs. There's what's known as governance tokens, which think of it as just like equity. Okay. Then there's a utility token, and think of it as just like Chuck E. Cheese, coins that you use. Yeah. You get to use them when you go into the Chuck E. Cheese ecosystem. Right. So FTT tokens were tokens. If you were a trader on the FTX exchange, you would hold that token to earn like rebates on your trading fees. Okay. But it doesn't give you, it's not an equity, meaning that the more successful the FTX is, the more, you get a dividend on that token. Okay. Right. You had no rights to that. All it was a utility token. Okay. So there's FTX, the equity, no more. And then there's the FTT token, which is a utility token for people to utilize the platform. Okay. Got it. Well, they were utilizing the FTT token as collateral. So they'd loan out $1 billion, $10 billion, $20 billion, whatever it was, and FTT token was the collateral. And so when the collateral collapsed, because we're in a bear market, if we wouldn't be in a bear market, we wouldn't even be talking about this. We wouldn't even know that this was occurring. Right. Yeah, no, I get that. So it's like, it shows how new the market is, right? How new this segment of like the financial market is. It's a developing asset class, and anytime something like this happens, I mean, it's highly unregulated in a lot of ways. And so I think, most, like you already said it, most of the people that got hurt in this are people that just didn't know what they were doing. And there were people who were in this exposed because they're not sophisticated enough to know where to hold their crypto. And so they held it on these exchanges
that somebody else ultimately controls. And so then there's not the transparency, and because it's not regulated. And so what this is going to do is it's going to help regulators like sort through everything, find things. It's going to be a big education opportunity for people to understand what to avoid, what to do. And it feels like this, like you said, this kind of keeps happening every 6 months or so right now, 6 to 9 months. And so if you were somebody who's like, all right, I haven't given up on crypto, I'm interested in it. In fact, now I'm seeing an opportunity, right? Because I agree with you. I personally believe it's got some more to go down. I'm by no means a crypto expert, but my gut about everything, like all asset classes right now, says everything's trending the wrong direction. I think it's laughable that like the S&P and the Dow and everything has like recovered in the way that it has. It makes no sense at all. Like nothing makes any sense in the economy right now. And so, but I think that was very like politically and election driven, right? Like somehow, so I think we're going to see a turnaround either in the holidays or right after the holidays in all markets. And I think it's going to be ugly personally. And so, but I think there's a lot of opportunity on the other side of that ugliness, right? And so if you're somebody in that spot that's looking for the best opportunities in crypto, without specific calls, because we don't want to get into like, telling people what to buy and what not to buy and all that stuff. But, where do you think kind of like segments are that makes sense? What kind of coins? And then where do you house them? Like, how do you, like, if you get crypto, explain to people, like, how do you keep that safe so you are in control of what you own and you're not going to be susceptible to be taken advantage of by some scam artists like this who scam the entire world very sufficiently.
Very, very sophisticated. And so I'll take the second question first, if that's okay, Chris. So,
yeah, perfect.
So where do you store it? The first thing that we teach when people come into our ecosystem is we don't even tell them which tokens to buy yet. We first teach them how to store them properly, right? Because the first principles of crypto is self-custody, is digital sovereignty, right? It's such that I can be here, or I can be in Thailand, or I can be in South America, and I can access my crypto tokens, and I have full 100% custody of them. All I need to know is the 12-word seed phrase that gives me access to either my MetaMask or my hardware wallet, right? And even if I lose my hardware wallet, which would be something like this here, I don't know if you guys can see this.
Yeah.
Even if I lose that, I can just buy a backup and restore it with that 12-word seed phrase, right?
12-word seed phrase?
Correct. There's a 12-word seed phrase with any self-custodied wallet. Some are 24 words, some are most of them are 12. But effectively, it gives you 12 words when you essentially download the software into it.
Okay.
Now, those 12 words are not stored anywhere. It's not like on iCloud or anything like that. So once you got it, you write it down, you make a couple copies of it, you laminate it, you put it in very, very safe places. Okay, make multiple.
And you memorize it.
And it's a good idea to memorize it, right?
Yeah.
Absolutely good idea to memorize it, right? So once you got that, whoever's got that can access it. Okay. So it should only be you and maybe your attorney or someone you trust in case something does happen
like
to
your
you.
spouse or something of that nature.
Right. Yep.
Yeah.
So we first start there. That's priority number one, because you should not have any inordinate amount of assets in crypto unless you know how to properly store it. And people are learning that the hard way again, with FTX. And the funny thing is, this hasn't just affected less sophisticated investors. It's also affected a lot of sophisticated investors who I thought were sophisticated, who had 8 figures on FTX. Imagine having $10 million or more on an account on an exchange that now is going to be froze for the next 4 to 6 years, and you might get 10 or 20 cents on the dollar for it, right? So all because you were egregious, or you trusted. See, and that's what blockchain's all about. It's about trustlessness. Okay.
Yes.
I don't have to trust that the blockchain's going to work. It works because there's no human on the other side of that pulling the strings.
People screw it up.
It's just code. It's software, right? And it's all open source, so I can audit the software anytime I want. Okay.
Totally transparent.
Fully transparent. Okay. So that's storage. That's number one. So if you
Mhm.
don't know how to use a MetaMask, learn. There's dozens of tutorials on how to open up a MetaMask account.
Okay.
Now you can't
Do you
hold.
have anything on that? Do you have any trainings on that you personally have?
Yeah, so that's what we do is we help individuals with that, right? So
All right.
like I said, we do personalized coaching though, and so it's more one-on-one or one on
Okay.
group. So 1 to 10, 1 to 20. Um, so we, if anybody's interested in our services, they can reach out to me. We'll post the links here.
I'll get your link and I'll put it in the description
Sounds
after the
great.
video, is done.
Yep.
Question before you keep going,
Yep.
on this topic, what do you find is typically like the I don't know, the amount of investment, like the asset amount that makes sense to start
Yeah.
doing it? Like, how expensive is it to start doing this the right way? And like, where's
I
that?
mean, hardware wallets can range anywhere from 150 to 250 bucks.
Oh God. So just do it, guys.
So just do it.
Just
So
do
you're
it.
talking like if you got, I'd say if you got $1,000 or more, it's worth
Yeah.
it, right?
Yeah.
And
Totally.
obviously, and then we always recommend having backups too.
Okay.
So once you got a few $1,000s, maybe $5,000 or $10,000, get a backup hardware wallet such that
Mhm.
you can, if something happens to your original one, right? Your house burns down, it's here. You have an off-site place in which you can store it. So like, a safety deposit box,
Something.
a hole in your backyard,
Yep.
somewhere where you could store it, right?
Okay.
So these are you got to think of redundancies, okay?
Yeah. Yeah.
So you got to have a redundancy in place because you are the only one holding. Just think of it as like gold. If you're holding gold, where are you going to hold it? You're going to have it in your kitchen cabinet,
Yeah.
or on your mantle, or you're going
Yeah.
to have it somewhere secure, right? So you want
Yeah.
to
It's
put it.
like I had a pile of gold and I buried it in my property in New York somewhere, and I'm the only one who knows it. Like
There you go.
you know,
Yes,
yeah, same concept.
that kind of thing, right?
Yeah.
Then to answer your other question is where are there areas in the market where there's opportunity?
Yeah.
So again, narratives are what shift crypto markets, just like any
Mhm.
other market.
Sure.
So one of the main narratives that I like right now is Ethereum has now moved from a proof of work chain to a proof of stake chain. Okay,
Okay. Can
but
you
it's
explain what
still,
that means to
yeah.
people?
So proof of work, think of it like Bitcoin. So you hear
Okay.
the term miners thrown around.
Yeah.
So there's all these miners that essentially solve this increasingly complex computational problem, and whichever computer solves that problem in a block in 10 minutes gets rewarded the Bitcoin. Okay,
Okay.
so those entities are known as miners. Okay, because it
Okay.
takes an increasingly amount of input energy that creates a hash, right? It requires an increasingly amount of hash power to solve that problem. Okay.
Okay.
So everybody's competing. All these nodes on the network are all competing. And so whoever wins that particular block, solves that particular block, wins the Bitcoin. Okay.
Okay.
Proof of stake is much, much less energy intensive. But what happens is you have to have a certain amount of the underlying asset or token to be adequate to host a node, and that node will then validate transactions on the network. So
Okay.
it doesn't require a lot of input costs,
Okay.
but you still have to run a server, you still have to run equipment, things like that, and then you have to have a certain amount of Ethereum. In this case,
So
it's
you
30.
like have to have your own bank of it,
Kind of,
effectively.
yes, yeah. And then
Okay.
other people can delegate to it. So if I had like one Ethereum, I could delegate to someone else who's running a node, and I could
Okay.
be rewarded in transactions, in transaction yield. So I think right now it's yielding anywhere from around 7, 8, 10%, somewhere around
Okay.
that.
Cool.
So Ethereum just recently did this a couple months ago, where they went from a proof of work to a proof of stake.
That's cool.
So now the energy consumption's down like 98% from where it was, 2 months ago.
Wow.
The gas fees have gone down significantly, but when the market comes back, that those gas fees are going to go higher again. Okay,
Okay.
so there's still
Yeah.
going to be kind of expensive to transact on the Ethereum network once the market comes back into a bull market again. So what they're doing is they are launching what's called layer 2 blockchains on top of Ethereum. So you still get to
Okay.
use the security of Ethereum, but you can transact at much higher speeds and lower cost on the second layer.
Okay.
So think of it as kind of like you've got surface streets on in the city, right? And then you've got the freeways that circumscribe it, right? So the second layer would be something like a freeway, right? So you can go much, much faster. You can get there much, much quicker, and it's much cheaper to transact. So those are being built right now.
Okay.
So there's many different layer 2 networks. And eventually, Chris, all these networks are going to be like, you'll be like bridging among them, and you won't even know it. But right now, there's those extra steps because the infrastructure is being built right now, right? There's the inconvenience of you're driving on a single lane road in the freeway because the other road's being built right now.
They're building the highway on it. You're in a detour zone right now.
Correct. Right.
Yeah.
So for early pioneers like us, you got to deal with the inconveniences of it. Okay?
Just get a Jeep like me and go off road.
There you go. I like your Jeep, by the way. But there are opportunities in these layer 2 networks that we really like. And so there's applications that are also being built. For instance, like decentralized finance exchanges. Yep. So think of anything that lives in the traditional finance ecosystem. So you've got borrowing and lending, you've got insurance, you've got exchanges, you've got derivatives exchanges, which is what FTX was. That's why everybody loved. That's why FTX had so much volume, is because it allowed derivatives, right? So you could do leverage on Bitcoin, you could do leverage on Ethereum, right? It was a casino. Well, those types of exchanges live in decentralized finance where there's no particular, you don't have Alameda front running your trades because it's all done on chain. Okay. So those things now exist, and they're going to become much, much more popular because this whole notion of you giving over custody of your assets on a centralized exchange, where now those things could, you have counterparty risk. They could blow up, just like what FTX has done. If you start using a decentralized exchange, you don't have that same risk, right? Now you're working with a smart contract rather than giving your assets over to a custodian. So that's where I feel like there's massive opportunities. And those things, you actually do hold the governance token, meaning you do own equity of it. So you're actually earning yield because the more that the exchange is successful, right? The best example I can give is like owning a casino. Okay. The house always wins, right?
Sure.
Okay? The house always wins. Mathematically, the house always wins. Same with exchanges. Traders are degens, right? Most people who are going 10x, 20x, 50x, 100x, they're gamblers. So they come to these exchanges to gamble.
Yeah. Totally.
And by and large, they lose. And so when they lose, the casino does better, and it distributes those profits to the shareholders. Yeah. So I look at my stake in these exchanges as like I own a casino on the strip.
And you can do that, like so when you do that, and you can put your coins up for stake and whatever, and without risking somebody else taking it and running away with it. You're not giving up control of them in a way. You're just kind of,
it's deposited into a smart contract. So I'm not giving custody over to somebody else. I'm deposited into a smart contract that is open source and it's audited. So I can withdraw from that smart contract in an instant. There is now some of them, occasionally there are vaults where there's lockup periods. It might be 24 hours or 10 days or something like that. But you just do your extra due diligence in knowing which ones are safe and which ones to avoid. But by and large, I can deposit into a smart contract today or right now, and 3 minutes later, I can withdraw it. Nobody's stopping me from that. Absolutely.
So, because full transparency, I got involved with USI Logic, I think it was back in the day. Do you remember them at all? Like it was probably 2016, 2017. So it was in the early stages, and it was like a lot of like mining stuff. And I had, I don't know, like 6 Bitcoin or so, 6+ Bitcoin that they basically stole from me. And back then it wasn't like the biggest deal in the world because it was like $2,000 a coin, $2,400 a coin. And it was like, man, I just lost like $16,000. It sucked. It didn't feel good to like whatever, but it really hurt when it hit 60,000 a coin. I was like, oh my gosh, like after the fact hindsight,
a rule of thumb,
they wouldn't let me take it out. Like I didn't have control over it. Like I had it in my thing. Like, so it was kind of like a smaller pre-FTX kind of situation.
Yeah. You're talking about, you actually sent it to them through an application So they probably had a website. You sent it to them. You could log in and you could see your,
account
which
value.
those digits are just fake, by the way.
I
Okay.
know.
So it's just like having it on an exchange. You have no longer have custody of it. Okay. So I will forewarn anybody who's listening, anytime you have someone offer you a mining deal, a Bitcoin mining deal or some other type of mining thing where, hey, give us X number and we'll give you a fixed percentage daily on it, run. It's a scam. It is an absolute scam. Okay. That's
100%
how they
of
get
the
you.
time.
That's how 100% of the time. And if they're running now still, it's just a matter of time before they're not running. Okay. So just run from those things. Do not, here's how people lose money in crypto. And when I say lose money, they lose money one of two ways. Leverage trading. I know very few people who have made money in leverage trading. Actually, I know a buddy of mine who took $5,000, turned it into 1.8 million, 1.5 million. Took $5,000 into that, and then turned that back into $98,000. Okay, so yeah, $5,000 and $98,000, great. Okay, but the amount of stress that caused him going up and down. He thought he was a millionaire, come back down. I mean, so
and he probably made decisions in life in other areas based on being a millionaire, having all that.
Bingo,
So by the time you get to 98K,
life expenses
life
went
is
up.
a lot worse than what it was when it started.
Correct. So there's two ways to lose your money in crypto, and that is leverage trading. So don't leverage trade, because you think you're going to leverage trade. You think you're going to be better than someone else on the other side of that trade who has been trading for years and decades. Okay. And they know way more than you do. Now, unless you're going to dedicate your time and you're going to do that full time, be my guest. But don't start leverage trading. Start just regular trading. Okay. So to get your feet wet. So leverage trading is the number one way that most people lose money in crypto. The other way is giving their assets over to someone else, right? Which is what people have done on these exchanges. They're giving their assets over to someone else and not realizing that, oh, I don't have custody of my assets anymore. They think, oh, I can deposit it anytime, I can withdraw it anytime. No. It doesn't work that way.
You give up control.
Because it's an unregulated market, these exchanges are not regulated to the degree that, E-Trade or TD Ameritrade is. Okay. They have insurance protections. They have FDIC. Okay. Your bank, you have FDIC. Now that's a whole other scam.
I was going to say, we're not going down that rabbit hole right now.
That's its whole other scam. Okay. So there's a false level of belief with those things as well. But listen, crypto is one of two asset classes that allows you to have full custody of your asset. Take advantage of that. Hold it the way it was meant to be held, which is in full custody, right? My title to my house, I can't hold that in full custody. Okay. It's sitting at county recorder's office. I can't hold that. They don't allow me to. Okay. My stock certificates. Yes, I could ask for bearer shares, right? But nobody really does that. Okay. Gold is the only other asset other than crypto that you can actually physically hold in your hand. Okay. So hold it like that. Don't give it to someone else. That'd be especially in crypto. And because we've enabled that, like this whole entire industry, that is the first principle of this asset class is self-custody, digital sovereignty.
Well, I think people just get excited about the hype of it. And then you have other people who are criminals and opportunists that see that and they take advantage of it. Right. So if you don't take the time to go through and educate yourself on all this stuff, it's not easy. And there's a reason personally, I haven't gone as deep into the crypto markets as I maybe should have, because I did it once. I dabbled, I got my teeth kicked in and, I'm like, I do what I do and I'm going to stick to that because that works for me. And, and plus by the time I realized it, I knew intuitively, I guess I didn't know, my instincts were that the market was overly inflated and I was going to wait until it came back to reality to really give it another really hard look. And we're coming to that place in time where I'm looking at this and I'm like, all right, the opportunity is here. I did an interview maybe back in May with Harry Dent. You know who Harry Dent is? So I had him on the channel. We were talking and he was saying, and this is, Bitcoin was way higher. It was on its way down, but like, and as it has been. But, he was saying he thinks Bitcoin's going to hit 7K. That was his call. And when it does, it's going to bounce to 250. That's his, cycle analytic thing that he does. And I love the guy. I think he's amazing. But like, so I've just kind of like had conversations with Harry, and like, like I'm going to have him back on the channel to talk about it again, because it's like, hey, it's kind of playing out the way he said it would,
So here's what I would say to that.
What he called the FTX thing, but
here's what I'd say. Here's what I would say to that. I love Harry too. I met him earlier in the year, and we have many good mutual friends together.
Yeah.
So right now, Bitcoin's at 16K. Right?
Yeah.
And by the way, this is not financial advice, but just
good disclaimer.
Let's just assume that his thesis is halfway correct. Okay.
Yeah.
And it does go to 250K in the next 4 years, 5 years. You picking it up at 15, 16K versus 10K or 7K is inconsequential, right? Because what if it doesn't get to 7K? Maybe it gets to 12, maybe it gets to 14, but if it gets to 12 and you're honing in on that, well, it's going to get to 7K, and it doesn't. And now before you know it, it's back at 30, and then it hits 50.
Yeah.
And so you miss the opportunity.
So dollar cost average on the way down, basically.
That's exactly what I'm saying, right?
Yeah.
Because you don't know, and everybody's got an idea on the low, but you know how many people actually hit the lows?
Not very.
Hardly anybody.
Yeah.
And it's a figment of your imagination, just like the top is. So many people, well, Dominic, if I'd have just sold at the top, guess what? You're not selling at the top. Okay, nobody is, unless you are the best of the best.
Yep.
Nobody's buying at the exact bottom. Nobody's selling at the exact top. So get that out of your head. Yeah. Right. You got to think about in terms of laddering and layering into positions and layering out of positions. Right. That anybody can do. So, so my point is okay, if Bitcoin goes to $200,000, which I completely agree, I think that it will go to 250. I think it'll be $1 million within a decade. Okay. So if that's the case, and I say that because look at just what the Fed's doing. If you just look at what the Federal Reserve's doing and how money works, it's not that difficult to understand how that's possible. Okay. Sure. So right now it's very out of favor. You buy things when they're out of favor. You buy when there's blood in the streets. I can't think of more negative headlines where more blood's going to be in the streets. Okay. Blood's in the streets right now. Maybe there becomes more blood in the streets, but the blood's already in the streets. So you buying here or allocating into a position, if you've never owned any crypto before, even if you do own crypto, is my opinion is it'll be a prudent move so long as you don't need that money to live next month, next 6 months, next year. Right. And
classic investing
for 2 to 4 years.
Yeah. There's a difference between saving and investing. I talk about this all the time. Like your savings needs to be liquid, accessible, for life in case of emergency. I talk about it in terms of an opportunity fund and an emergency fund. Like you have your emergency fund that you need to live on, but like take whatever opportunity fund, split some off. And, I look at it through the lens of like, where else are you going to be able to get the kind of asymmetric risk potential that you have in crypto right now? It just, I mean, this is opportunity that is almost never existed.
Correct. This asset class is not going anywhere. Anybody that tells you that it is full of it. They don't understand it. Now, is there regulatory concern? Absolutely. There's massive regulatory concern going on. And there will continue to be. That said, it's not going anywhere. There's going to be a way where they'll regulate it. But and a lot of the quote unquote shit coins are going to go to zero. Right. Yeah. So if you're not comfortable on speculating that far out on the risk curve, then you can just stick with Bitcoin and Ethereum, because Bitcoin and Ethereum are not going anywhere, and dollar cost averaging into them. And I think that
it's very similar to the .com age, when a lot of the .coms just.
Correct. Yeah. And they haven't, where's pets.com? Gone. Right. And, and that's what we specialize in. We look at those, we get granular. We look at those investment opportunities that have the potential to 50x, 100x, 500x over the next few years. So that's kind of where our specialty is. But the easy way to do it, if you don't need our services, is you can just buy a hardware wallet. You can just start buying into some Bitcoin. You can just start buying into some Ethereum and hold it on your hardware wallet. And just keep doing that, rinse and repeat. You get paid an extra, if you got an extra $500 or an extra $200 of discretionary income every week or every 2 weeks, you can put it on an auto buy. You can use Coinbase. Coinbase is still a good account. The way I look at Coinbase, yeah, but because you're not gonna hold it there for any material time. Once you get it there, then you immediately withdraw it to your hardware wallet, right? So Coinbase and all these other exchanges are like a public restroom. You get in, you do your business, and you get out.
Okay. But you pretty much have to use a Coinbase to buy it initially.
You have to. You need to, unless you can do an OTC transaction, which is called over the counter, which means you can find someone, and you can go to like localbitcoins.com, I think it is. Okay. And you can find someone in your area. It's more inconvenient because you got to meet up with the guy. You got to make sure they're not a scammer. Right. You got to know what you're doing a little bit. So if you're a little bit less sophisticated, I would recommend going that route. And if it's not, you're not laundering, cash.
Yeah. Because like, I mean, the bottom line, if like you and I wanted to do like a Bitcoin exchange, I could go, we're not going to do this, by the way, but I could go to Dominic and be like, hey, I want to buy 2 Bitcoin. And if he said, okay, I got 2 Bitcoin I want to sell, we could meet up at a Starbucks and, I transfer from hard wallet to hard wallet or cold storage to cold storage, right? Is that the term? Did I use that right?
Yeah, exactly. Yep.
So we could do that. And then there's no record anywhere of the fact that Chris Kirkpatrick has Bitcoin. And so I think a lot of people in their mind, that's what they think of all this as, and they look at the dark side of that, of the money laundering and all this stuff. And that can absolutely happen. And I think that's also one of the things that scares the crap out of the government and the Fed and the IRS and all this stuff, like that can be happening behind the scenes. But when you buy it through Coinbase, I mean, everything, there's transaction records and receipts of everything. And that's where there's going to be, tax. You got to think about that. And I'm not by any means proficient in my level of expertise or knowledge in that space on the crypto side of things. But just know that, I think the more Coinbases that we have that are based in the US that are regulated, I think regulation is scary, but it's also a really good thing potentially because
there's really only 2 exchanges that I would recommend. And when I say recommend, I'm not recommending them. What I'm saying is that they're the 2, if I'm looking at a hierarchy of safest exchanges.
You're fairly comfortable with them.
I would be comfortable with Coinbase and Kraken. Gemini to a degree. Kraken does things the right way. Okay, cool. Gemini, Kraken, Coinbase. But again, not for you to hold your assets there for weeks on end, right? It's there for you to get your assets, acquire them, you go from fiat to crypto. Once they allow you to withdraw it in your hardware wallet.
What is the cost of that? Earlier you said like, hey, it's going to get more expensive. Like, what do you typically like have associated costs with like buying it, acquiring it, and then is there a cost to transfer it back out to your wallet?
Yeah, there is. It's small. It's small relative, right? Mm-hmm. So let's say you do a transaction, it might cost you 0.5%. Let's say you do $1,000, it might cost you $50, $30, somewhere around there. Okay. If you're going to do it consistently and you're going to do larger amounts, there's this thing called Coinbase One. Coinbase One is essentially a monthly $30 a month. And then it's free fees. There's no fees. Oh. Yeah. So you can do that.
Coinbase. Nice.
Yeah. They kind of figured it out. They're smart. All right. I don't know if Kraken's got something similar. Gemini, I'm assuming they probably do. You can also do the auto, like every 2 weeks, you can do an auto draft, $100, $500, $1,000, whatever you want. I recommend that for people who are dollar cost averaging. Just make sure that every couple of weeks or you go in once it does draft, and then you move it to your hardware wallet once again. Right.
Yep.
So those are some really easy ways to just make sure you are accumulating. And this is an asset class, like I said, that you start now doing this with some of your investment capital. If you have never bought crypto before, and now is when you're thinking about getting in the market, you're gonna be very, very happy in about 2 to 4 years.
Yeah, I love it. I'm gonna have to talk to you more offline because I need to get on this donkey again. Yeah. Because I got out of all my positions, everything. Because because I had some other,
Yeah.
coins,
Yeah.
speculative coins. And I just hit the point where I was just not comfortable, and I was doing okay in some of the positions. I was just like, I'm out.
Yeah.
I'm just going to, I don't want to have the stress of it, quite frankly.
Yeah.
And I had other places where I was like, I can get it to work in other areas, and I'd rather do that and not worry about it, And so, but now it's like, I feel like the timing is better, and like, just, so we'll have to talk. But
Yeah.
so for anybody that's interested, like, how do they get a hold of you? I mean, obviously I'll put the links down below once we're done, but this is live. So for the people watching live, how do they get a hold of you? And, maybe kind of like walk through a little bit of like what your offerings are, because I'm very curious.
Yeah, we have some courses. So one of our courses is called Insider Crypto Secrets. And the way it's kind of for new people who are new to crypto.
Okay.
It really goes into the terminology. Whenever you're getting into a new asset class, if you don't know the language, you don't know what, you don't know what you're doing. Right. So if you're investing in real estate, and you don't know what cash on cash return is, or if you don't know what net operating income is, you don't know these terminologies,
Cap rates.
you're lost. Right.
Yeah.
So Insider Crypto Secrets does its best job as possible to like take the 20% of what you need to learn that's going to give you 80% of your results. Okay. So what are tokenomics? What's proof of work? What's proof of stake? Right. What are some of these things that are terminologies inside the ecosystem that are like absolutely necessary for you to understand? So that's Insider Crypto Secrets. The way I liken it is like taking you through like elementary into middle school. Right.
Okay. Yeah.
And then we do another class called DeFi Masterclass. So that's specific to DeFi or decentralized finance. And that's more of like instructional. So I actually go through, click the buttons, show you how to acquire different assets inside of a MetaMask or self-custodied wallet. Because Insider Crypto Secrets, once you've gone through that, you can actually set up your MetaMask. You now know how to do it. Okay. Once you're DeFi Masterclass, now it's kind of like middle or high school to like, graduate level college. Okay. You now can do it all. Like you can evaluate a token project. You know how to like, if someone asks you, well, Dominic, would you invest in this? Well, now I have a framework of which to evaluate it. Okay. It'd be like me going into Apple and looking at the balance sheet and the cash flow statement and all that kind of stuff and how to evaluate a business for investment. Only this is crypto related. Okay. Because crypto is completely different than any other asset class. You don't evaluate it the same way.
Sure.
So that'd be like DeFi Masterclass. And then we have our coaching, which is more like one-on-one or one-to-many, right? So like maybe 10 or 20 people on a call. We do it consistently, like every week. And then we have our mastermind, and that's for people that really want to take this to another level. Like they don't just want to, buy and hold Bitcoin and Ethereum. They want to invest, for the next decade in a technology that's going to completely change life, like change society. And so they see the big picture. They're a little bit more sophisticated, but people kind of go through our continuum, right? So they start with our courses and then they go gravitate into our mastermind eventually. So yeah, they can either reach my you can go to our website, which is redwoodscrypto.com. I'll also give you my email for those that are interested. They can just email me directly. It's just Dominic, DOMINIC @redwoodscrypto.com. So feel free to email me, and happy to help guide you on your crypto heroes journey, we call it, right? So
nice. Yeah. I like it.
Yeah.
I like it, man. Well, that's awesome. Well, thanks for being here. This is a lot to contemplate, consider what's going on in the world. And I just thought, just kind of recap, I just thought this was so important because, anytime you get stuff like this, like you said, there's the narrative of what's going on in the world. And I look at this as an exciting thing, right? Like, not because I'm excited and happy that people got screwed and burned and lost billions, millions and billions of dollars or whatever, because obviously that part is horrible.
Yeah.
But I think overall it's a step in the right direction, and it creates a lot of opportunity. And so I'm going to sit here and say, like, I think over the past 2 years, there's never been a better time to relook at this if you haven't really given it a lot of consideration.
Opportunity
and I'm just saying that not for anybody else. I'm saying that's how I'm coming at this. Like, because I've kind of had like, crypto, I'll come to it when I think the time is better. And I'm just going like, time's better.
Time is better. I mean, listen, everybody wants to buy things when they're cheap, right? But
Yeah.
what they do is our brains don't work that way. Our brains get FOMO, and we buy into stuff as it's already gone up and as everybody else is thinking about it all at the same time. It's almost like this like, you know, the signal gets spread through society and everybody's getting it all at the same time. And there's very, very few people that can counter trade that or like see, you know, to sell when it's time to sell and buy when it's time to buy, right?
Yeah.
Buy when it's hated. This is a gift. This is an incredible gift. If you look at like the people who made all the money, and this is, listen, the cycles repeat. Like look at the Great Depression and the people that made all the money during the Great Depression. You have Joe Kennedy, who is notorious for having sold his stocks before they tanked and bought them back up at the Great Depression. And then look what happened. We all know the Kennedy name because of that, right?
Totally.
So these opportunities exist. You buy things when they're hated. Okay. And right now, crypto is extraordinarily hated. You don't take your attention away from it. You put your attention towards it, right? If everybody is saying something is hated, now is the time to give it additional consideration.
Yep.
Right. And so psychology is so important in this game. It's
like reverse psychology. You literally got to use the reverse psychology of this.
Yep. I mean, and then all the headlines, ignore the headlines too. You got to think, you got to look at the headlines for what they really are. Right. There's also, I'll say this in closing, is I know people who know how this game is played, and they know for a fact that the media manipulates the market through these institutional funds, right? The institutions will actually go to CNBC, they'll go to Fox Business, they'll go to Bloomberg. They will actually incentivize these puff pieces being written, okay? Because what happens is these institutions will need liquidity, okay? The only way they can get liquidity is if retail is either buying their bag or selling their bag to them. Okay. So if you were to just counter trade the extremes of headlines, you're going to do better than probably 95% of investors out there. So when there's really negative sentiment, you buy. When there's really positive sentiment, you sell. And if you were to just do that, very, very simple.
You're going to be better off.
You're going to be better off than 95% of investors.
100%. I love it. I love it. And honestly, that's why I love all the infinite banking stuff, because it puts you in a position where you're liquid, so you can actually do that and behave in that way, right? And so we won't get into that though. That's a whole different video. So, hey man, well, I just want to thank you for being here. I know that was a ton of value for a lot of people. So guys, if you haven't already, by the way, Dominic, do you have a YouTube channel or anything?
We're actually starting to build one. So we'll be coming out with starting some content here shortly. So I'll let you know about that for sure.
Rock and roll. So when you do, we'll come back on, we'll promote it and all that stuff. And when he does, I'll add the link for that down in the description below as well. But guys, check them out. If you're watching this live, it's redwoodscrypto.com. Go check it out. And I'll put the descriptions down below as soon as this kind of gets published for, evergreen style. And we'll go from there. If you haven't already subscribed to our channel, hit the bell. That way you're notified every time we launch a video. And that's it. Thanks a lot. And we'll see you on the next video.
Love it, Chris. Thanks, man.
All right.